Welcome to the Golden Safe, where we provide you the knowledge and the tools necessary for you to achieve financial freedom. Today we delve into a fascinating financial instrument, the exchange-traded funds, or ETFs. Imagine a basket. This basket is filled with a variety of fruits, apples, oranges, bananas, and so on. Now, instead of fruits, imagine this basket is filled with a mix of financial assets, stocks, bonds, commodities, or a blend of these. This is, in essence, what an ETF is. An exchange-traded fund, or ETF as it's commonly known, is a type of investment fund. It's designed to track the performance of a specific index, commodity, or a group of assets. Think of it as a mirror reflecting the performance of an underlying asset or group of assets. The ETF owns the assets it tracks and divides ownership of those assets into shares, which are held by shareholders. So, let's say you purchase shares in an ETF that tracks the S&P 500. You are essentially buying a small piece of all 500 companies in the S&P 500. But unlike buying individual stocks, you're not directly owning these companies. Instead, you're owning a share of the ETF that owns the stocks. ETFs are marketable securities. This means they can be bought and sold just like individual stocks on a stock exchange. They have a price that fluctuates throughout the trading day as they are bought and sold. This is different from mutual funds, which only trade once a day after the market closes. In summary, ETFs offer a way for you to diversify your portfolio without having to buy each individual asset. They provide a simplified means to gain exposure to an array of assets, sectors, or investment strategies. Now that you have a basic understanding of what ETFs are, let's explore why they are such a popular choice for many investors. ETFs hold a unique appeal in the world of investment, and for good reasons. As we delve deeper into the world of ETFs, or exchange-traded funds, it's essential to highlight two of their primary benefits: flexibility and liquidity. Firstly, flexibility. ETFs, unlike their mutual fund counterparts, can be bought and sold throughout the trading day at market price. This is a significant advantage. Imagine you're an investor, and you've woken up to some financial news that could impact your portfolio. With ETFs, you don't need to wait until the end of the trading day to act on this new information. If you decide that the time is right to sell, you can do so immediately. Similarly, if a golden opportunity presents itself, you can buy more ETFs on the spot. This flexibility gives you the power to respond more swiftly to market changes, placing control firmly in your hands. Now, let's talk about liquidity. In investment terms, liquidity refers to how quickly an asset can be bought or sold without impacting its price. High liquidity means you can easily convert your assets into cash. ETFs are traded on exchanges, just like individual stocks, which makes them highly liquid. This liquidity ensures that you can enter or exit your investment positions with ease, reducing the risk of being stuck with an unmovable asset. It's worth noting that the liquidity of an ETF is also influenced by the liquidity of the underlying assets it tracks. For example, an ETF tracking large-cap stocks will generally be more liquid than an ETF tracking small-cap stocks. However, even in less liquid markets, the ETF structure can still offer better liquidity than investing directly in the underlying assets. These two advantages, flexibility and liquidity, make ETFs an attractive investment option. They allow you to adapt to market changes quickly and to enter or exit your investment positions with ease. The flexibility and liquidity of ETFs are just the tip of the iceberg. There's more to this financial instrument than meets the eye. So, stay tuned as we continue to explore the world of ETFs in our next segment. Beyond their flexibility and liquidity, ETFs offer other compelling benefits. The first advantage we'll discuss in this segment is diversification. You see, diversification is a strategy that can help investors manage risk and potentially enhance returns. And this is where ETFs truly shine. An exchange-traded fund, or ETF, is a type of security that involves a collection of securities, such as stocks, that often tracks an underlying index. This means when you buy shares in an ETF, you're essentially buying a slice of an entire portfolio, exposing you to a wide array of assets. This is an easy and efficient way to achieve diversification, as opposed to buying individual stocks or bonds. Imagine trying to create a diverse portfolio by buying individual stocks. You'd need to research and buy shares in dozens, if not hundreds of companies. That's time-consuming, complicated, and expensive. With ETFs, you can achieve this level of diversification with a single purchase. The second advantage we'll discuss is lower costs. ETFs are known for their cost effectiveness. They typically have lower expense ratios than mutual funds. An expense ratio is the annual fee that all funds or ETFs charge their shareholders. It's expressed as a percentage of your investment. So a lower expense ratio means more of your money stays invested, potentially leading to higher returns over time. The reason for this cost difference is primarily due to the structure of ETFs. They are passively managed and aim to replicate the performance of an index rather than trying to outperform it. This passive management style requires less buying and selling of securities, which can result in lower transaction costs and tax efficiency. As you can see, the advantages of ETFs extend far beyond what we've discussed today. The combination of diversification, lower costs, flexibility, and liquidity make ETFs an attractive investment option for both novice and experienced investors alike. Stay tuned as we delve deeper into the world of ETFs in our upcoming segments. The world of ETFs is vast and full of potential for those who understand how to navigate it. We've explored the key advantages of exchange-traded funds, their diversity, accessibility, and cost-effectiveness. Embracing these tools can pave the way to your financial freedom. It's a journey of learning, investing wisely, and reaping the benefits. If you found this video helpful, please give it a like and subscribe to the Golden Safe for more insightful content. Remember, knowledge is the key to your financial freedom.